Hey everybody, Brian here. It is Thursday the 5th. We're going to look at three markets, the SPY, the Qs, and the semiconductors. On top, we'll have the daily chart. Down below, a 15-minute time frame. The S&P on the daily time frame continues to be ugly here, and we've yet to test fully that year-to-date anchored VWAP. We've got the 200-day moving average in there as well, and then this 38.2% retracement down near about 417.5. Seems as though that could be a level this market heads down to. When we look at the shorter-term time frame below, we've been rejected at the declining orange 5-day moving average, as well as the anchored volume weighted average price from last week's high, that blue one, and the low of last month. So that continues to show us that this market is guilty until proven innocent. The NASDAQ has been a little bit more, a little bit choppier actually in here as it's trying to stabilize near this 5-day moving average, but there's been no buy signal in here. We never made a higher high above a flat to rising 5-day moving average. So for that reason, we've been out of it, and that's a good thing. When we have all this crossing back and forth and showing this uncertainty, it says stay away. It's concerning that we're back below the volume weighted average price for the low this week and up above. The anchor from this low right here seems like that's going to be tested again. I wouldn't be surprised to see a deeper pullback down towards the March anchor, which would bring this down to 347. And the main reason for that is the action in the semiconductors. This has been pretty ugly here as well. We're getting rejected at the anchored volume weighted average price from the April low, that's that green one, and from this high right here in August. So those two come together right at this neckline that we've been talking about, that double-headed head and shoulders pattern. That's the two heads and the two shoulders here, would imply a move down, well, first to this level. We're likely to test this real soon. And beyond that, there's a greater danger that we could be heading down towards the year-to-date anchored VWAP at about 136. On the shorter-term time frame below, this vertical line right here shows us where we were exactly 5 days ago, same exact time. This is a 15-minute time frame. In 15 minutes, we're going to be getting rid of this data right here. If we're below here, that means this 5-day moving average, which is flattening out now, is going to start to turn low. And if we get stuck below a declining 5-day moving average, and then we break below this low right here, I think it could be lights out for the semiconductors. I've got some short exposure with a stop up in here and part of it, and the rest of it, 2/3 of my stop is right up here, a third of it up there. It remains dangerous out there, so be careful.